Welcome to another interesting video. Today, if you are a repeating visitor, you are most welcome. Today, I'm going to discuss best Forex money management strategy. Everything we are talking about Forex is about money. It's about making money or losing money. So this is the most exciting part or topic every Forex trader need to pay attention to. Why do you need Forex money management strategy? Now, there are three good reasons why you need a money management strategy. A well-defined money management strategy. One, protects your capital. Protects your capital. Two, it controls your emotion in the market. From your emotion. And thirdly, track your progress. A well-planned money management protect your capital in the market. The number one rule of forex trading is to ensure that your capital is always guided, protected, because once it is guided or protected from the war front, you will have the power to come back again. But let loose of your capital, that is the end of that market for you. So you have to plan money management. What is the normal money management here to protect your capital? Is risk taking. What percentage of your money are you willing to let go in the market? Some may go for 2%, 3%, 4%. As the case may be, some may even go for 10%, as the case may be. In fact, interestingly, some go for 100, risk 100% of their money. Do you know why or how? You will see your money going, losing. You will be shifting your stop loss. If you are a stop loss trader, you'll be shifting your stop loss until you see the red line on the margin. So as a rule, as a trader, you tell yourself, whenever the market goes against me by 2%, by 3%, I'm off that market. That means that trade is not meant for me to make money. So it helps you protect your capital. So what is the best money management? Is having some percentage, a predetermined percentage of your funds readily available to let go in the market. Then it controls your emotion. You know, once you enter the trade, the market goes negative against you. And if it continues in the negative mood, you see most traders start jittering. You get jittery because you did not plan what you want to expose in the market. So if you have a predetermined plan of 2% of my capital, once it's gone, I'm going out of the market, then you'll be emotionally calm watching the market as it moves. The third stage is track your progress. Yes, it gives your progress. It makes, once you have a plan, now you will see if at all I am getting to where I'm supposed to go financially or not. It will make you change your strategy. Haven't done that. Haven't said so. What else do we need to do when it comes to building a forex money management? Now, it helps you. The key components of forex management, the key component of money management in forex, the key components are, you define, I've said this, define your risk management. Yes. Position sizing. Now, as I earlier said, these are the key components in building best forex money management strategy. One, you define your risk management before you go to the market. Secondly, that reflects to the position size you take. That is the lot size. Assuming you are a trader with $1,000, you can comfortably go for one lot size, but you know this is crazy. One lot size means 100 pips wipes away this capital. You can still go for 0.5, 0.1, 0.01, depending on the size. This determines the percentage you want to allow to be in the market at a time. As a rule of thumb, or no, as a trader, I said in one of my videos, your trading strategy determines or depends on your personality. So if you are aggressive someone, you can go for one lot size. The higher the risk, the higher the chances of making more money or the chances of wiping the account. I am not such trader. I am a conservative trader. I go little by little. Slow and steady. Remember, this market has come to stay. You are not the one to determine how long this market will go. No. So in that case, you have to be conservative. You have to follow it slow and steady to trade over time and time. Then what else do we do in our money management tips? One of the things, or what the best thing to do, is to diversify your portfolio. Now, this is diversify your portfolio. Now, in trading, this has two meanings. You can trade 4 pairs at a time. To some people, that is diversification of their portfolio, but it's wrong. Remember, the number of pairs you expose your capital to, the more risk the market is for you. So diversifying your portfolio in my own setup is, if I'm trading $1,000 account, that means I want to attend one lot size in all the trades I will go into. So what do? I may start with 0.2 lot size and watch the market where it goes. Remember, it is a speculative market. You are not 100% sure. You may, after your analysis, say the market will go up, it start going down. Now, when it goes down to the next support, and I've seen some indicators, some things that will make me trade, I can go for 0.3 or 0.4. You see, I am splitting the risk bit by bit. If you want to trade so many pairs at a time, then you must study those pairs, the correlation. Some pairs move in the same direction. Euro USD and GBP USD most times move in the same direction. And you may be saying you are diversifying. No, you are still doing the same trade in different pairs. So you should remember that Forex is business, real-time business. So you must have your plans laid down. You must have your money management strategy. Tailor your plan to your needs. I keep repeating this in all my videos. Forex should not be your fundamental way of making money. If you are a beginner, it should be a side hustle so that you master the terrain and have the capital to come to it. The best money management plan is the one that works for you. The one that works for you. Adapt the strategies to your risk tolerance, trading style, and experience level. It's as simple as that. With this, you have created, or you will create, a best Forex money management strategy that will suit your trading pattern. Thank you for watching. We'll meet in the next video.